Hi there, traders. This is Brad Gilbert with today's trading action. Now, just looking at the markets in the sort of not really quite in the middle of the Asian session, but thereabouts. The US equity futures just down a little bit. I guess it's creating a little bit of a risk-off situation, but not much, right? The currencies aren't moving much, and I'm not surprised with the US CPI numbers due for release. Not quite tomorrow, but the next day. So let's just have a look here. What's going on the charts? And if I just get my pen across there. Okay, so the dollar, a bit of a pause. If anything, a little bit of dollar weakness coming into the market. Dollar yen is having another crack at the top side. I'll tell you what, the BAJ have got to be like, I think they've got one big push left in them. Maybe they'll let it just go back a little bit further before they crunch dollar yen one more time. But at the moment, as you'd expect with Wednesday's US CPI numbers, things are looking a little bit, or sort of just waiting, right? It's a bit of a waiting game. Now, one thing is key here, right? And this is all focusing on today. It's the UK employment numbers. Now, we had those sort of pretty wacko sort of GDP numbers that came out Friday, right, on sterling. And it's sort of given sterling an underlying bid tone. All right. And what that means is by a bid tone, like an upward bias, right? And you can see it. It's doing its best here against the Aussie, against Euro sterling, sorry, pushing Euro down. Sterling Swiss, you can see it a little bit clearer on sterling Swiss. I still think there's a good move potentially to 115. Sterling CAD's been chopping around a bit, but generally sterling up and sterling yen up as you'd expect, and sterling Kiwi. Right, so we've got a bit of a situation here where sterling is climbing or wants to climb against the crosses. Now, why isn't it going? It needs another big push. It needs a kicker, right? And this is what we get here with the unemployment numbers. Okay, we're looking at the employment change, the unemployment rate, and then you've got average earnings in there as well, right? So the consensus here, or actually, let me just take you to News Squawk and give you a bit of a look at the real sort of forecasts. This is going to be important. I think that there's a chance here for an easy trade to be long sterling, right? The now average weekly earnings, okay, expected to be 5.5. It was previously at 5.6, so a little bit lower. The claimant count change previously was 10.9. Unemployment rate is expected to be 4.3, a little bit higher than previously, and the employment change, right, minus 215, a little bit more than previous as well. So they're expecting weaker numbers, okay? But with the GDP numbers, we've got sterling going up. So there could be a potential trade here, both sides of the market. But really, the key to it for me is like the path of least resistance, where momentum is the easiest trade. So to me, even though we're expecting slightly weaker numbers, if we get slightly stronger numbers, okay, it's going to sort of change the structure of potentially the vote count, right? We had the Bank of England vote count last week. They went from 8.1 to 7.2, which pushes them a little bit closer towards making an interest rate cut at some stage. Strong employment numbers on top of strong GDP numbers creates a different picture, right? That everything is pretty good. So, and that creates an opportunity to get long sterling against some of these crosses that haven't actually moved too far at the moment, right? Obviously, sterling yen still moving with the dollar yen move. Sterling CAD, you know what? I traded that last week, made a couple of pips out of that, but I'm not sort of so keen. I think sterling Swiss to me looks ideal. It's in the middle of nowhere. It's got clear upward bias, and that to me would be the best one for a strong sterling. Now, don't take me wrong. There's a chance here for really weak numbers, and that blows out the GDP numbers. So you've got to keep your wits about you. You can either look to try and trade both sides of the market, okay, just trade live, or you can just focus on one side in particular, right? And that's sort of where the market is at the moment. We're waiting for the US CPI numbers come Wednesday, but right now the focus today is sterling. Get onto your sterling charts, get onto your sterling crosses, and sort of try and piece together what sterling is doing across the board, right? And come trade time later today in about 4 or 5 hours, that's what you want to be looking at, right? What's sterling doing against all the other instruments? All right, guys, that's it from me. All the best. Cheerio.